Good evening, ladies and gentlemen. This is Clueless 8, and this is the end of the day report for May 22nd, 2014. We covered a significant amount of videocasts yesterday, both on the markets as well as on individual stocks. So tonight I'm going to go quickly over the daily frames on these indices: the Dow Jones, the S&P 500, the Russell 2000, the Nasdaq Composite, and the biotech index, the primary ones that I track, and at the same time go over a few of individual equities, given the fact that we covered a significant number of stocks last night on the videocast to a great detail, and there's really not much to elaborate other than to say that they pretty much hit their marks 110%. And I hope that a whole bunch of you were there to participate and profit from those very accurate and precision forecasts. Saying all that, let's start off with the Dow Jones Industrial Average futures and get an idea of what we are seeing here. This is the daily chart here, okay? And last night I covered it all in the weekly in a much broader perspective. This is obviously slightly micro picture, so let's see what we see here. So here we are with the Dow Jones Industrial Average, another sharp day. This little move here that we saw, let me try to move in, could be construed as somewhat of a bull flag. We do have internals which are somewhat positive. I wouldn't call it hugely positive, because then these lines have to really open up like this, okay? And we don't have that yet. We do have the McClellan hitting the midpoint and maybe needing a day or two of rest, which we might very well get next week, early part of next week. So here we are with this. We have an open move air here up to go, gets towards 16,807. That's roughly about 300 points from here, a little less than that. Or we pull back and we test, we pull back about 100 some points towards and hold the 34 and the 34-day moving average, possibly the 50, but this type of reversal bullish engulfing candle negates that possibility. However, anything can happen in this market, and if we do have a reversal down, which is a bearish red candle which engulfs these two, then we are going to fall below 16,300 and head towards a lower Bollinger, which is 16,154. Keep in mind these numbers are slightly off, given the fact that the Dow Jones and the futures are correlated, but off by a couple of points. So just keep that in mind. I don't have in front of me exactly what the Dow closed at, but let me take a look at it on my lower screen. Bear with me 1 second. So we have a better idea. The Dow Jones closed at 16,543. So this is off by, the futures are like 6 points lower. Okay, so just do the math yourself. So if we complete this pattern, then we're going to come up to the highs of 16,694. That's going to be about 16,008. What is it? Something like 16,005. Sorry, 16,685 or something like that, or 86. So anyway, so that's what I'm trying to say is that we could complete this pattern, or we could go like this and fall apart, and then move up. My gut tells me that we are probably going to get to a 16,617, and then we figure out from there. Anyway, that's enough of the Dow, but as you can clearly see, we still have a positive pattern moving here, and barring any major breakdowns, such as a bearish engulfing candle that engulfs these two and a big red one here, we're good to go. Okay, let's move on to the next one that we always cover, which is the S&P 500. Okay, this is the daily chart of the S&P 500, and we're actually looking good. Okay, we are looking at the S&P 500 to move up towards the 1903 level, rounding off the numbers. Covered this yesterday, and we have an upper Bollinger on the daily at 1917. I think we get there. I think we get there by the end of the month. Okay, um, so here we have internals which are supportive. They're starting to get overbought. They get overbought up this level. Clearly see that the McClellan is pointing up, getting towards, over the red line is overbought like we have here. Okay, generally precedes a top by about a day or two. So we are looking pretty good here as we get into the holiday weekend and going into the end of the month seasonality, where there's a significant amount of window dressing and portfolio managers rushing in to stock up their portfolios with big cap, fast moving, high beta names to show that they're smart enough to buy at the lows, which they're not. So window dressing is somewhat of a very, like the name suggests, artificial move to spruce up the portfolios so that they can show their investors in the quarterly reports or the monthly reports that they own those particular high beta, high return stocks. Okay, now we're going to take a quick look at the Russell 2000, one of my favorite indexes, and see what the heck's going on with that. This is the daily of the Russell 2000. I keep repeating, and I'm going to stick by it for now. Unless we have a significant breakout of the Russell 2000 below the below this level, which is the 1090 level or thereabouts. Okay, this is where the opportunity lies. Okay, these are for aggressive traders. You've seen repeatedly, all of you, since I have opened up my detailed explanations and detailed trade alerts on the Russell and the IWM, how well we have done with this. Okay, these type of small moves that you're seeing here translates into thousands of dollars of profits for individual traders. Okay, and hundreds of thousands and million plus dollars worth of profits for not professional, institutional traders. So let's not get hung up on the fact that, oh, it has to have a massive breakout over the 1137 to change direction, blah blah blah. I keep on reading this stuff on different blogs, different market gurus talking about, newsletters talking about the fact that they're not convinced it's not over the 34, which is this red orange line here at 1124. It's not over the 50, so they can't buy it. I had a post of a fellow stock Twitter, tweet me earlier saying, hey, I can't really buy this because it's below the 34. Well, who the heck cares? We've been making money off this right off this level. We all know that. Let's not be dogmatic about the fact this has to completely turn around and go higher and change the whole direction. You know what? I really don't care. All I care about is the fact that you could buy it here at 1088 or 1090 and ride it up to 1117 for about 37 points. Okay, or you could buy it the day before at 1092 and then sell it at 1116. That's 24 points. That's a lot of money. So you're trying to understand what's going on through my head. I can't always explain every single detail, but that's just the way it goes. So I'm just going to draw one quick line because I'm running out of time on this segment, and you're going to see that we are very close to a breakout. The breakout's at 1121. We are sitting here at 1113 after reaching a top here. This blue line here is this is the 50-day. This is the 200-day line. Okay, so once we cross over that, we're going to attack the 34 and possibly get towards the 50. So let's keep an eye on this, because once it breaks out, it's just going to be a runaway train, and then we short it again. Okay, so this top is 1137, mark that on the book, and IWMs correspond similarly. So that's it. So the Russell 2000 again is showing some very strong internals here, as you can see in the McClellan and the oscillator and the stochastics, and I think we can break over these levels. Okay, let's move on to the next video. I'm going to close this segment.